Whereas usually if you'll tell us what the issue is, we can figure out a way around it. Or we can quickly tell you we can't help you, but maybe these folks can. So
one thing we always talk about at RateStars, we're not in the money business, we're in the time business. Okay? And all these lenders I think would agree with that, right? If you're not effectively monetizing your time by closing deals, then this business will eat you up and spit you out, right? It's about closing loans, moving money, and serving clients, right? So, all right, so let's pivot on. We've got about 17 minutes left here. So I want to go through and let's talk about, just for another quick round with Taylor, and then we'll open up for other Q&A. Let's talk about what do you guys feel kill deals that brokers bring to you for your product line. Okay, why don't you dive in, we'll just rotate again. How do you start?
Bad customers. I mean, at the end of the day, some customers just shouldn't be borrowing money. I mean,
another magical question we ask at RateStar is when a client comes to us, ask them, why am I so lucky to be talking to you? Why am I so lucky to be talking to you? And the second question that you really have to talk through with them from a broker perspective is, what is your lender journey been prior to speaking with me? Okay? Have you talked to your banks? Have you talked to any alternative lenders? If so, and what you need to get across to the client is that you have all the lender relationships, right? You're a part of NACLB, you're part of, you have lots of lenders, right? So again, if you always phrase it to the commercial real estate investor or the business owners, my goal is to save you time in effectively accomplishing what it is that you came to me for. But you have to give me a clear picture. You have to give me all the data, because if I know that Jeff, Robert killed the deal, well, maybe it's a shot with John, maybe Terry's going to do it, right? But it's critical that you understand the lender journey and not just go, oh boy, a client's calling me, he's got a property, he's first mortgage on. So it's very key to dive into those details. Because like these guys said, their underwriting teams are really good at what they do. They're going to find what the issue is, and then it's again going to be wasted time. The client's part, the broker's part, and the lender's part of no deals are close.
so just to follow that up, right? And I think you hit the nail on the head there. When I say bad customers, some people shouldn't be borrowing money, especially brokers that are just getting into the game, right? And we're pretty much real estate lenders up here. That's really what we do. We're lending on investment properties, but this really goes for any product line that you choose to originate, whether it be cash advance or factoring or any of them. When you become the expert in that product line and you get that call from that customer, you know pretty much whether or not that loan makes sense. The newer brokers, especially new to a particular vertical, tend to grasp onto loans that just aren't going to get funded. So you end up spending the most valuable commodity of all, which is time, trying to fund a deal that's never going to fund. And that's when I say bad customers, that's the deal killer, right? You becoming the expert goes back to what we started with in that product line, and the fast no. That fast no is a game changer. And we teach it internally with our account executives. Our most productive account executives who shepherd our brokers are fast no's. No, this doesn't make sense. Stop wasting your time. What's next? And it's not always easy. You got bills to pay, right? Like, I really need this loan. But the fast no will end up getting you there much more rapidly.
Yeah, that's exactly what we teach too. Right,
Yeah.
Great points. All right.
I guess the thing I would add to that is sometimes it's what kills deals, the how, not the what, right? So how the deal has to get structured, how, like if you're coming into the negotiation, if you will, with this is what my client wants, this is what needs to be done. What I lose sleep over is one salesperson in our shop could help you through it, and the other one couldn't. Right? They told you said we need to do it this way, and then no, we can't do that. Whereas somebody else might say, well, listen, if we do it this way, we can maybe make it happen, right? And then you've got to be able to negotiate with your client on there's ways to structure the deal that are not necessarily what the first thing that comes to mind. So if you can be open-minded and be willing to be flexible on how the deal gets done, sometimes you can get deals done that wouldn't necessarily have been the way you thought about how it needed to be done. So,
three things: cash, credit, experience. Cash, credit, experience. Find those things out from your clients on the front end. Find out how liquid are they, because in this market, more so than say ever, but since 08, 2009, 2010, they need to have liquidity. We've been at these conferences before when somebody's walked up to us and said, I need 100% to cost. 100%? Yeah, so-and-so over there said they can get me 100%. Can you do it? That's not happening right now. You need to be liquid. Your clients need to be liquid. Okay? Experience. Are they experienced in doing this? Now, experience above all else matters in what it is that Lima One Capital does. Okay? Watching HGTV at 10:30 on a Saturday morning and seeing that you can make 120K in 30 minutes on a flip, that's really cool in Hollywood. That's not happening in the real world.
It's not real.
It is not real, okay? And every deal that your client brings to you that is the best deal out there is not the best deal. Trust us. We've seen them. Cash, experience, and credit. Ask the question. What's your credit score? It's 800. Okay. There's a lot of lies that are told. Credit tends to be one of them, okay? What you need to know, what's your credit score? It's 800, great. Next one, our team follows up with this. That's great to hear. When was the last time you checked that score? 3 years ago. All right, great. Has anything in the last, whatever 365 times 3 is, number of days happened that would impact that? Because every one of us has credit buckets or credit parameters that our underwriting team has to make the deal fit inside of. And I may not be the right lender for you, but if you walk up and down each and every one of the halls in here, there's probably a lender, if I have to say no, that somebody else can say yes to. But as it was mentioned earlier, time's the most valuable commodity. The last thing we want to do at Lima One Capital is waste your time and vice versa. And if you have a deal that comes in and you borrower says it's 800 credit score, they've done 25 fix and flips in the last 2 years, 3 years, whatever it may be, the team knows immediately, all right, let's get a track record in before we start pricing things out. Let's figure out, is this really what it sounds like? Because more often than not, someone else said it, customers lie. They do, they lie. And the last thing you want to do, because we aren't going to communicate with your clients, the last thing you want to do is tarnish your own reputation with your lenders. Because if you tarnish your reputation with your lenders, when the phone rings and I see your number, and I see the other phone ringing and it's my other broker who I fund in 12 deals a month with, guess whose number I'm going to pick up first?
That's a really good point, and I mean, especially as things are tightening up right now in this market. I know we have seen an uptick in just, you know, some fraud and things like that that have gone on some loans because people are trying to get deals through the door. And I do think the customer is a big reason deals get killed, but I think for us, I'll echo what Robert was saying about structure. You know, working at Pier Street, we actually, you know, we're very open to working with new brokers, new lenders, new companies that are really getting their feet wet into lending on fix and flips and things like that. We're also open to working with new borrowers who are, you know, haven't done a fix and flip before. You know, the interest rate and the leverage, the interest rate will be higher, the leverage will be more restricted, but we're open to that. We have the staff on hand to be able to, you know, kind of coach you through that, coach you through how to use our platform, coach the lender or the broker on how to talk to the borrower and get that deal closed. So that's not something that, you know, we're super afraid of, but what we do want to make sure is that, you know, when you're coming in the doors of Pier Street, you know that we operate in a different way. We maybe ask for something that somebody else doesn't ask for, and I think that there's, you know, being here for 5 years, I've seen it in the market's really good. We have accounts come through the door and they're like, well, so-and-so doesn't ask for this. I'm not going to go do this loan with you guys because, you know, it's easier to go do it somewhere else. Well, now that options are dwindling a little bit, it's really important to know what that lender is asking for. What is that checklist? You know, for us, we require an appraisal on all our fix and flip deals. Coming in the door and knowing that up front is huge, because really that's where our deals get killed, when somebody you know, doesn't see through that checklist. They get to the final stage or something falls out, and then, you know, it's just not a good look. It's not a great way to continue a relationship. So structure, I would say, for us is a good thing.
I think it's a lot what you said about the credit, or the cash experience of credit. That's important, very important. But also honest transparency, okay? We're trying to close a deal a couple of weeks ago. We get down to the end, and we ask you to fill out, your client will fill out a little form for us that asks if you ever had a felony conviction, that type of stuff. Okay, what are we looking for? We're looking for credit fraud, right? So we were ready to close this deal, and prior to going to funding, the credit analyst has to pull a clear report, and sure enough, 2 years ago, federal conviction for credit fraud. And we're not gonna do that deal. So it's on the questionnaire, there's a reason it's on there. So I think as a broker, you can help this by making sure you're transparent with them that, hey, these lenders, they do verify. They're gonna check that what you say is the truth, okay? Because if they're lying to us up front, do you think they're gonna lie to us about making the payment on time? And really, that's all we want, is we want them to make the payment on time, right? So I think honest transparency between you, the borrower, and us goes a long way. You tell us there's an issue up front, we can tell you quickly, can we work around it or not, or are we not a fit that fast knowing it? So that time is money in our industry. So.
I think along with it, because I'm surprised it didn't come up, because I guarantee every lender on this panel, valuation is the number one thing. And so, and you've got some ability to do a Zillow search. If the borrower is telling you that this property's worth this number, and it doesn't make any sense to you, and they can't explain how it makes sense, and then you push it to us, and it doesn't make any sense to us, and we spend 3 days trying to figure out whether this thing makes any sense or not. So that is, you know, all of us are going to require a appraisal of one form or another. And so if it just doesn't make sense, it probably doesn't make sense, and it's not going to.
And we can close on a broker's opinion on certain amounts of deals. If it goes over $1 million, we're going to appraisal. But under $1 million, we'll use a broker opinion, okay? But we use our guy. We don't use yours. We use our guy to look at the property and say, yeah, this is worth it, so it's not. And he's got 35 years of experience.
So I think they all hit on a really good point. As a broker, I would encourage everybody to look at, in your process with your borrower, what are the things that you can control versus the things that you can't control that kill deals, okay? Because the more time that is invested in the deal, the more frustration you feel when you don't get across the finish line and closing it, okay? You brought up a great point. One thing that brokers can't control is if that appraisal comes back and kills the valuation of the property, right? But a lot of what these guys hit on is the front end process. Like at Rainstar, we teach the concept of what are the skeletons that we need to know about, okay? And if you just dig into that and say, hey, listen, you need to tell me now, because I need to put it in my write-up, in my summary of the deal when I send it to any of these lenders. Otherwise, there's gonna be no shot of getting it done. It really helps the whole overall process. You can even make a joke out of it. We at Rainstar, we're joking like, listen, these lenders, underwriters, and credit analysts are really good. So if you've had any sort of bankruptcies, foreclosures, but then we keep pushing it, we go, judgments, DUIs, listen, if you've even had a parking ticket, they will find out. So just make a joke out of it, right? Just lighten the mood. And you'll find that, again, you're going to have a better client if you can get that honesty. But it's all about you on the front end, inside of your process, framing it in a proper way to be able to flesh out what those issues are. Okay? All right, we've got 3 or 4 minutes.